let's take a look at the companies that affected some of what had been expected to be a bullish run on the NSE on Friday, straight into East African breweries, of course being affected by the fact that we've had the Alcoholic Drinks Control Act for 2010 being implemented, and which, among other things, limits, as I said, bar opening hours. How are you reading that scenario and what it means for East African breweries?
I think it's a little bit bifurcated. International investors cannot get enough beverage equity across sub-Saharan Africa. They pushed the share price to a new all-time high January 6th of 227, and we've pretty much been in free fall since then, and I think we're now back below 200. And that's really on the back of domestic investors getting very nervous about these more restrictive drinking rules, which have effectively forced bars to close at 11. If you go in the supermarket, you can't really access alcohol as you could before. And everybody's turning around and saying, just how much can EABL grow in these circumstances?
So just how much can it grow? Because we've had this company saying that it's already led to a sharp drop in revenue thus far. I mean, what's your outlook for this company?
Well, it hasn't been on a high growth trajectory for a long time. It's been growing at around 10 to 15% on the EPS and on the turnover side. But investors had got excited by the Serengeti transaction, where it looked as if they were going to be able to expand regionally more aggressively, which I think they will. But their dominant market is in Kenya, and the regulatory environment is asphyxiating their business a little, for sure.
Let's take a look at regional strategy here, because that is under the spotlight at this stage. We were discussing with Grace a little earlier how Kenol Kobil is really venturing forcefully down this route, expanding its regional footprint, especially at a time where we've had some of the multinational players in the oil marketing space pulling out.
Yeah. No, absolutely. I think, you know, the Nairobi Stock Exchange, most of the corporates have really, you know, they've understood the regional play. They're all playing quite aggressively for the most part. I like Kenol Kobil. I think they've been very aggressive about adding regional real estate from all the way from Ethiopia, this latest transaction in Uganda, Mozambique, and that bulking up gives them, I think, key advantages going forward. They were under a little bit of pressure in the local market as you know, as the price cap came in, but it looks an attractive stock. They gave a very bullish steer in December when they asked investors to expect very strong results at the full year mark. I like their strategy, and I think it's going to pay off, and I think the share price is a little bit undervalued. What's
your view on Mumias? Because we've been talking about this company and the fact that it, relative to the kind of spike we've seen on world sugar prices, has been performing pretty badly, but it seems warranted at this stage, where we've had 6 months to the end of December numbers being released for 2010, and that not very encouraging, Aly Khan.
They were really poor. I mean, I've got no other way of saying it. I'm just shocked at how poor they were. Sugar prices are at record highs. There's a very high correlation between sugar prices and what we should be seeing in Mumias Sugar's underlying earnings. The divergence since, I think it was the 9th of October when the share price hit 15.50 and the sugar price took off, the share price is now below 10. We've fallen about 37% at a time when the sugar price has really rocketed higher. So I, for one, I'm sidelined. I saw they said they'd have a better full year than they did last year, but I've got serious questions about the trajectory of that earnings curve given the background to the sugar business.
Especially,
and I'm looking very keenly at it.
Especially where we've got very serious risk factors to take into consideration here, and one of them being competition from cheaper imports from more efficient African producers, because global prices are still high. Taking a look at that competitive landscape, I mean, do you see Mumias managing to battle this out?
Well, Mumias is getting lucky, because the higher the sugar price goes up, the less likely they're going to receive competition for parallel imports or sugar dumping. So it works in their favor if the price goes up. But I agree with you. I mean, you know, these results tell me there is a serious issue around execution. And I'm drilling into those numbers to see where it lies, but I'm not comfortable with this company at the moment, no.
Yep. What about a player like kakuzu within that agricultural space? It announced that it was investigating a claim by a supplier that it owed 109 million shillings from dealings several years ago. Do you have any insight into what exactly we're looking at there and how serious this could be for kakuzu?
It's regarding the years 2002, 2007, 2008. Del Monte are saying that the prices that kakuzu received for their pineapples was not reflected back to Del Monte, and basically they've landed them with a claim of about $1.5 million US. That's all I know about it at the moment, and I haven't been able to drill into more detail, but essentially Del Monte are saying to kakuzu that they did not pass through the total price that they should have done for the pineapple business that they were doing together. So it's an issue, we need to keep an eye on it, but I think the bottom line story with kakuzu is a positive one. It's about avocados, it's about tea prices. I'm very bullish on tea and the breakfast commodity space. And you've got the added kicker with kakuzu that it sits on land on the Thika Superhighway, which has spiked extremely high. And I think once they put a proposal as to how they're going to extract that land value, I think you can see a further surge in the share price.